Almost everybody has cash flow as an item on their agenda. And what we usually hear a lot, there's an old adage that says cash is king. And you hear it very often from persons who do motivational speeches and so on. And if cash is king, then cash flow has to be the heart that pumps cash flow through the kingdom. So what we're going to do today is just go through a few brief problems of cash flow management and problems, causes, and we're going to look at things and ways in which we could help you to manage your cash flow more effectively. So so basically, what is cash flow? And it simply is just movement in and out of the business. And it's a very integral part to business success. And everybody knows that poor management of your cash flow can lead to business failure. We've heard all the other presentations earlier about business plans, bootstrapping your business and so on. If you don't manage your cash flow effectively, then it could mean that you wasted time doing all those other things. And the main causes of cash flow problems. First of all, it could be that your sales are not high enough. Basically, what you have to do is ensure that whatever you're doing, you're making enough money to make your business sustainable. The undercharging and not collecting money fast enough, those are other issues which may arise. Business expenses being too high, poor inventory management, things like overstocking and where you could put the funds somewhere else. So rather than buying a whole set of, if you are no offense to anyone, but if you are someone who sells clothes, you don't want to buy a whole set of stuff that's not going to turn over fast enough. So you have to make sure that you look at things like that. Growing your business too fast, people may have a really good year and decide, you know what, I can open a second location. That's something that you have to pay very careful attention to. Again, as Ms. Bell said, you have to ensure that you bootstrap your business and plan for expansion and so on. Poor choices in relation to financing options. You always have to ensure that you look at the best financing options, and that's strange coming from a bank, right? Right, now we're going to look at some ways to manage your cash flow a lot more effectively. And one of the things we advise people to do, first of all, is to invoice immediately. Make sure that you get bills out to those persons who owe you, because that's the only way they can pay you, if you send them the bills. Then we ask you to look at these next 2 points together. Examine your accounts receivable, and most people know what accounts receivable are, those people who owe you over the long term. Examine them regularly, and also keep an eye on your collections. And one of the things we normally advise people to do is to look to see how quickly you can collect the funds that you have. So you give people shorter time frames in which to repay you. Most people do a 30-day collection cycle, and while you then in turn ensure that you then pay out a little less. I don't want to say it, but what we tell people to do is if somebody gives you 90 days to pay them, you pay them close to the 90 days. If you give your client 60 days to pay you, then you pay as close as possible to the 60 days. So it gives you more money to circulate in the business. Consider offering clients incentives for early payment, discounts and so on. Access price points, avoid undercharging, because one of the things you know can happen is sometimes you may start and you may undervalue yourself. So ensure that you always sell for what you're worth. Seek deposits on extended contracts, and this is something that we see a lot of other people doing now. We encourage you especially to look at this, because if a client or if a customer gives you a deposit, it's most likely that they will come to settle the bill because they don't want their money to go down the drain as well. Perform due diligence on new non-cash clients, and this is something that you will realize that is going to be very important You do background checks on people, their credit rating agencies and so on. Ensure that the person who you're doing business with is somebody who's going to end up paying you. And then that ties into the next point, refuse to do business with poor paying customers. There are persons who you may have as customers. Yes, they're going to purchase this stuff, but they take forever to pay. One of the things we often hear in business circles is every year you look at your business and get rid of your 10 worst paying customers, as long as those are not the only 10 you have. But this is something that you can look at doing, because it gives you some financial security, because those persons who take long to pay you just frustrate your business, and then it impacts on your ability then to pay the bills that you have to pay. One of the other things we do is encourage sales. So if you have slow moving stock and so on, you can have a sale to liquidate the outdated inventory. You turn unused company assets into cash, and that is if you have an old filing cabinet or something. There are people who may want to have these things. They're startup businesses who always want, an old desk or an old filing cabinet or something. You sell them off and you get some money to put into your business. You encourage customers to pay with credit cards, or debit cards, because that is a sure way to get money. If you expose yourself to losses by accepting checks or credit arrangements, it can run you into some serious trouble. So a lot of the time, most banks will offer the merchant service, where you get a credit card facility that will allow you to have access to credit and debit card payments that will go directly into your bank account.
It's actually still okay.
Yeah. And one of the other things to do is to improve your sales and your marketing effectiveness, because as Ms. Bell mentioned, again, things like social media, Facebook, Twitter, and these kind of things, and email blasts are easy ways to get your message across, and it's cheap advertising as well.